investor that made millions betting against the majority. Welcome to my channel. AI Wealth Insights is a channel that informs, teaches, and learns how artificial intelligence is changing how people work, create, and make money online. My objective is to open the door to new ventures and how to achieve one's journey. Artificial intelligence, AI, is a tool that has become a global pathway practically for anyone to use to make money and earn an income. Share your feedback, click like, subscribe, and comment. Thank you. In many cases, the narrative of a retail investor who won millions of dollars by betting against the majority is a monument to patience, acute intuition, and an excellent comprehension of market dynamics. The conventional thinking is challenged by these individuals who delve deeply into facts and patterns in order to discover opportunities that others overlook or disregard. Both the bravery to remain steadfast in their beliefs, even in the face of popular skepticism, and the patience to wait for their theory to materialize are qualities that they possess. Narratives like these frequently draw comparisons to individuals like Michael Burry, who was depicted in the film The Big Short, who made enormous profits by seeing faults in the assumptions that were prevalent in the market. Other contrarians, who flourish by capitalizing on risks that were mispriced, are also frequently used as examples. The power of independent thought and the benefits of taking measured risks in spite of the majority are both brought to light by these stories. Can a single retail investor outsmart the titans of Wall Street and turn the tables in their favor? Elements of success in betting against the majority: deep research and analysis. Retail investors who succeed in high-stakes, contrarian scenarios often invest significant time and effort into analyzing data, market trends, and financial statements. Armed with readily available online tools and resources, they delve deep into company fundamentals, industry reports, and macroeconomic indicators to identify undervalued opportunities or mispriced risks. Their ability to uncover discrepancies, such as overlooked growth potential, hidden weaknesses in a company's strategy, or structural inefficiencies in the market, sets them apart. This meticulous research allows them to develop unique insights that institutional investors may miss or dismiss. By combining patience with analytical rigor, these retail investors can capitalize on opportunities that others fail to recognize, turning their knowledge into substantial financial gains. Contrarian thinking. Going against the herd demands unwavering confidence in your thesis, even when facing widespread skepticism. This contrarian mindset often leads investors to short, overvalued stocks, anticipating a market correction when others are overly optimistic, or to buy undervalued assets that the majority have overlooked or abandoned. It can also involve entering highly volatile or emerging markets where uncertainty and risk deter most participants. Such decisions require thorough research, a clear understanding of market fundamentals, and emotional resilience to withstand criticism and short-term losses. While the risks are significant, the rewards for being right when the majority is wrong can be extraordinary, as evidenced by some of the most iconic investment successes in history. Risk management. While the headlines often focus on the massive wins of retail investors, their success often hinges on disciplined risk management strategies. Many use tools like options to hedge their positions or amplify potential returns with limited downside risk. Others diversify their portfolios across various asset classes, industries, or investment types to mitigate the impact of any single loss. These strategies allow investors to balance the high risk of contrarian bets or volatile markets with a safety net to preserve capital. Even in speculative endeavors, the most successful retail investors understand the importance of setting stop-loss orders, maintaining liquidity, and carefully sizing their positions relative to their total portfolio, ensuring that a single misstep doesn't result in catastrophic losses. This balance of boldness and caution is key to their long-term success. Access to tools. The digital age has dramatically transformed investing, leveling the playing field for retail investors by granting them tools and access once reserved for professionals. Platforms like Robinhood have revolutionized trading with commission-free transactions and user-friendly interfaces, making it easier for individuals to buy and sell stocks and options. Social media communities, particularly Reddit's r/Wall Street Bets, have allowed retail investors to share insights, strategies, and coordinate efforts, as seen during events like the GameStop short squeeze. Additionally, the widespread availability of market data, analytics tools, and educational resources has empowered smaller investors to make informed decisions, reducing their dependence on brokers or financial advisors. Famous examples. Michael Burry. The famed hedge fund manager you're referring to is Michael Burry. In the mid-2000s, Burry, the founder of Scion Capital, made a bold and unconventional bet against the US housing market. He recognized the growing risk in the subprime mortgage market, where loans were being given to borrowers with poor credit, often without proper documentation. These loans were bundled into mortgage-backed securities, MBS, and sold to investors, but Burry saw that they were highly likely to default. Believing the housing bubble was unsustainable, he took a significant short position by purchasing credit default swaps, CDS, on these MBS. As the market began to unravel in 2007 to 2008, Burry's predictions proved accurate, and the value of his positions soared, ultimately making hundreds of millions of dollars for his fund. GameStop Saga, 2021. In early 2021, retail investors from Reddit's r/Wall Street Bets community orchestrated one of the most dramatic short squeezes in market history, targeting heavily shorted stocks like GameStop, GME. These investors noticed that hedge funds and institutional players had overshorted the stock, betting that the struggling video game retailer's price would fall. By coordinating mass buying, particularly through options trading, they drove up GameStop's stock price, forcing short sellers to cover their positions at enormous losses, further amplifying the rally. The event took Wall Street by surprise and became a cultural phenomenon, symbolizing the power of retail investors against institutional dominance. Among the key figures, Keith Gill, known online as Roaring Kitty, emerged as a central figure for his in-depth analysis of GameStop's potential value and his conviction in holding shares through the chaos, turning a modest investment into millions and inspiring others to join the movement. Have you ever wondered how some investors see opportunity where others see failure? Tesla shorts and early adopters. During Tesla's early years, the company faced significant skepticism regarding its ability to scale production, achieve profitability, and compete against established automakers. This uncertainty created a polarizing environment for investors. Many short sellers bet against Tesla, anticipating its financial collapse due to high cash burn, production delays, and a limited market for electric vehicles. These investors initially saw gains as Tesla's stock price fluctuated under the weight of negative press and operational challenges. However, others, convinced of Elon Musk's vision and the long-term potential of electric vehicles, took the contrarian approach and bought shares when the stock was undervalued. As Tesla overcame its production hell, scaled operations, and turned profitable, these early believers reaped massive rewards, with Tesla's stock surging exponentially to become one of the most valuable automakers in history. The dramatic divergence in outcomes underscored the high stakes of betting on or against a disruptive company. What would you do if you spotted an opportunity that everyone else ignored? Would you have the courage to bet against the crowd? Thanks for watching and subscribing channel.